Good morning, it's Harvey Jackson. Just going to get through some of the news items here today. Uh, let's just get into it. Ukraine offers Russia truce in Black Sea as food supply fears mount. I think it's just a lack of being able to get product out is more the issue. Um, yeah, there's pressure from all sides here, but there doesn't seem to be any defense for the ballistics as that Russia's pounding Ukraine with and hitting civilian infrastructure, and the same thing with the drone attacks. They seem to get almost anywhere in Russia now and able to hit a lot of their pinch points for either getting out crude oil or wheat. So ConAb came out with their estimates yesterday, and again, there's always a battle of who's going to be right. U.S. seems to react a little bit slower, and they have different numbers than what ConAb, the reporting agency out of Brazil, but the trend is higher. So corn production is expected to be higher, and soybeans just it's not far off either. So. I thought this was interesting. There's a petition to oust the uh, um, appointed ambassador to Canada, which is appointed by the U.S. As you can see here, that there's a petition that's got 70,000 plus signatures and whatever. Well, how do you get rid of somebody that's appointed by the U.S.? And even if they do change, it can be a lot worse. If you think that this is just going to be um, uh, it's the status quo, they can find somebody worse than the current. Uh, Interesting here as well. Canada was promised the best trade deal, and instead they're left with tears, and that's what Bloomberg has even had an article about the U.S.-Canada trade there. So more economic data came out yesterday. The PPI came out at zero point 0.3 less, and that's just pointing to very unlikely to have any rate changes on the next Fed interest rate changes in the U.S. Lots of active weather in in the map here. Uh, in some instances, it's flooding, but you can see that here that it's going to be hot and dry to the south. You're going to have storms and rains just going over, and I'm not sure what we're going to be left with up here, but you can see here's some flood areas, and then you got heat right below it, just as that other map kind of indicated. You got a few inches of rain still in the next 7-day forecast, and probably close to that in uh, southeastern Saskatchewan and southwestern Manitoba here. So drought index is now at 50.4%, and it's basically west versus east scenario here. Just quick look at the markets here. So you got canola is up at 807.30. Rapeseed is up as well, and I think that's the one that's pulling the canola up here. The relationship seems to be switching all the time. Who's got the strongest relationship here? Soybean oil down, uh, and crude oil is basically flat at right at the 80.70. Diesel fuel is down slightly as well. Soybeans up 4.5 at 11.86. So you could have these relationships maybe somewhat the strongest here. So spring wheat is up 8.5 cents. Hard red winter is up 12.5 cents, and your Chicago is up 10.75 cents. Milling wheat up 2.25 at 2.35. Corn is up 4 cents at 4.76, and Canadian dollars up again. Just a quick look at it, you can see that you've got this channel trend here, and if you're looking at the near term, you basically have to get above this and stick it above this value. So basically 805-ish area, and if that happens, we could take a run at that 840 mark again. But this wave analysis, basically, you can say higher highs, higher lows so far, and now is that going to continue going through and circumventing the seasonality? I am not certain. Um, it depends on how short some of these other areas are, like the European rapeseed. Soybeans have all kinds of decent demand. So here's your European rapeseed. The same kind of scenario that we're talking about here as well. And it is right now currently above that previous high. That's the same kind of spot on the chart on the Canadian canola as well. Here's another one that's actually pushing up is the palm oil. Palm oil is breaking out. A nice trend, stair-stepping its way up here. Soybean oil, not the same trend at all. Nowhere close. Soybeans kind of dragging along. It is above the short-term moving average, but still kind of stuck here in between some of the short-term and long-term, or medium-term, I should say. Crude oil, it's faltering at the moment, and we'll have to hope that there's some sort of resolution there. But it seems like the oil and the world is figuring out how to get oil out of that region without going through that pass. I'm not certain of the statement that I'm about to make, but U.S. might just keep that blockade on, and who it's starving the most is Iran. So, um, yeah, sure, there's a lot of other products that are going to get impacted, but we'll have to see how long that can last as well. Diesel fuel, that's the one of the commodities that does not uh, come out of that area, and it's creating all kinds of pinch points for uh, just having that available in the world. And this could be what's actually going to continue to support the canola as well, as countries are looking for some sort of security, and they're going to use veg oils to uh, uh, make biodiesel or something like that to keep that security going. Canadian dollar, it's on this trend. It went through this 61.8. We'll have to see if it gets stuck there, but it looks like we're heading towards this 200-day moving average. And if it gets through there, you're looking at these kind of areas as well, 73 and a half, 73.75. I'm not confident, as these discussions for the trade are going to create some angst in the market as well. But there's also angst in just dealing with the U.S. period with any country. So here's the U.S. dollar bond. It's faltering, and that's exactly what the market kind of wants, is lower interest rates. S&P though, making some new highs here again. Quick look at wheat. This is doesn't show up much on the longer term chart, but it's got an upward slant to it for sure. And you can see it even more in the Kansas and the Chicago as we keep on. We've made possible lows here, and looks like we're going to continue to push. And a lot of that is due to the Russian Ukraine conflict, but also just U.S. being tighter supplies as well. Corn futures having trouble getting back to that same value that it closed out at during the USDA report. We'll have to see how it closes out today, but I would expect that we might be able to see ourselves getting back to those values. Let's quick look at the live cattle. Looks like we're going back to these lows that we made a few weeks ago, and that's what directionally is going there. And if we blow through there, we're heading down even farther. And feeder cattle, the same idea. I have this low, but it made a lower low, so it's actually down here somewhere now. And it's directionally the same thing is happening with the hog futures here as well.